Move on to fintech, onto financial services, in fact. So, financial services, it's basically, it's going to be between cash, plastic, or phone, okay? Those three things. But which one is the way forward? Certainly, many in the room maybe would go for one of those themselves. So remember, digital wallets are taking the e-payment gateways and platforms certainly to the next level. But e-banking is still not enough anymore. Consumers, customers certainly want more, not just in the Western world, but certainly pretty much everywhere around the globe now. So, what I'll do now is invite again all our panelists on stage. We're just getting the names ready, aren't we? Yes, we are. Popping them on as quick as we can, and then I'll invite the moderator to deal with the session as well. So first of all, from the Central Bank of Jordan, Miss Maya Bahu. Is Miss Maya Bahu here? Hello. You can give her a round of applause. I think she does it absolutely. We all love a round of applause. It feels good. Okay. We also have the CEO of the Bank of Khartoum, Mr. Fadi Faki. Welcome. CEO of Arab Bank, Mr. Eric Modave. And the CEO of Liwa, Mr. Ahmed Moore. And we also have the CEO of Neck Payments as well, Mr. Andrew Sims. And also the moderator who will be dealing with this session right now here on stage from Wamda Capital, a partner there, Mr. Walid Faza. Is Walid here? Yes, he is. He's getting ready. As he's getting ready, that's absolutely right. Okay, so as you know, today has been certainly a very royal affair. Ladies and gentlemen, we also have another member of the royal family with us today. Please put your hands together for Her Royal Highness Princess Noor bint Asim. So many royals. Jordan has a lot of royals, don't they? They do. Too many, is that what you do? Okay, after you.
Thank you. And thank you everyone for staying around and joining us for the final session. We try to save the best for last, so we hope that this is going to be a very engaging session about fintech, which I think is a huge opportunity for the region and for the globe as well. I'm going to introduce the panel very quickly. Mr. Eric Mudavi is the Chief Operating Officer at the Arab Bank, a position he has held since July 2014. And he has over 25 years of experience in the financial services. Before joining the Arab Bank, he was the Chief Operating Officer at Barclays Africa, where he was based in Kenya and Johannesburg, covering 12 African countries with a lot of great insights on banking and fintech, which pertains to developing countries. So thank you for joining us. Mr. Ahmed Moore is the co-founder and CEO of Liwa. It's a peer-to-peer lending platform that connects SMEs who need capital with fixed income investors. So since inception, the company has underwritten over $2.4 million across 104 loans and is continuously growing. Here's our chance to learn a little bit more about pioneers of peer-to-peer lending in the region. Mr. Andrew Sims is the Director and Chief Executive Officer of NEC Payments, a Middle East payments technology company that provides a suite of innovative technologies to power high-performance, flexible, and secure multi-channel, multi-currency, multi-wallet payments processing and financial control solutions. The company is licensed and regulated by the Central Bank of Bahrain, a seasoned entrepreneur, executive management consultant with extensive experience in financial services, technology, and consultancy in creative sectors. So thank you for joining us as well. Ms. Maha Bahu is the Executive Manager for Payment Services and Domestic Banking in the Operations Department of the Central Bank of Jordan. Ms. Maha has 26 years of experience working for the Central Bank of Jordan, and prior to that, worked at Philadelphia Consulting Group. Great to have a representative from the Jordanian regulator on the panel with us to give us insights on how the government is preparing for the revolution of fintech moving forward. And then we have Mr. Fadi Faqih, who is the CEO of the Bank of Khartoum, the largest bank in Sudan. Mr. Fadi has over 20 years of banking experience in leading international and regional banks across different countries, regions, and cultures. He has general experience and expertise in conventional and Islamic banking, as well as specific expertise in finance, project management, transformation, re-engineering, operations, and retail banking. The bank was awarded the Islamic Bankers of the Year in 2014 and 2016. Thanks for listening to all of that. I just wanted to show you the heavyweight kind of panel that we have here today, which is very diverse and hopefully will give us a lot of insights on what fintech is. To kick this off, WAMDA does a little bit of research, and I just wanted to put fintech kind of in perspective on what's happening in the region. WAMDA is releasing some research and data earlier next year in collaboration with PayFort. And some of the findings, just so that we can get this going, is that there are over 100 MENA-based fintech startups. So this is something that is already kicking off in our region and is healthy and growing. And over half of them did not exist in 2013. So these are brand new companies that have started up and have already employed over 1,600 people. And 80% of the surveyed fintech entrepreneurs have relevant industry experience, so they come from within the fintech, some fintech backgrounds. So I'd like to pose a question to the panel and kind of just go down the list so that you can let us know what have you done in your company that is innovative and that is changing the way that you're doing business recently. Mr. Fadi, please.
Okay. First of all, thank you very much for the introduction, Walid, and thank you, fellow panelists and dear guests, for this opportunity. For our organization, Sudan, as a lot of people might not know it, it's a vast geographical country. The sort of finance or banking system there is Islamic by nature, by regulation. And Sudan started its mobile or its technology revolution in 2005, where fiber optics were laid down in the country. They started where everybody ended. Of course, that was an opportunity. It is an opportunity for the banking sector and the financial services sector to innovate and create. One of the things that we've done in the organization I work in, Bank of Khartoum, the largest bank in Sudan, is basically we introduced the sort of financial services which will enable people to be able to enjoy the financial services. Said so, but there's still yet more to do. One of the things that, as part of under the umbrella of the financial inclusion, of course, is the aspect of microfinance and the relation to mobile payments and the consumer payment systems. Microfinance did not exist until 4 or 5 years back. And we started doing innovative incubators for graduates and undergraduates to have their own projects run. And under the Sharia mode, whoever knows the Sharia mode, it's basically the bank is a participative into the project, where we had young entrepreneurs do their own projects, and we managed to get them the technical expertise, including UNDP, UNIDO, and many other NGO organizations under that. And this has been recently just complemented with a national scheme, very similar to the Jordan scheme under the mobile payments, to include a financial services to complement the payments system side of it. However, saying this, still there's a lot of things to be done on the ground to include people with the financial services that are needed.
Thank you.
Yeah.
Ms. Maha, how do you see things that you've taken on recently that is innovative in this space, or ushering in innovation into this space?
To start, thank you all for waiting that long to attend our session. We started like a transformation for the landscape in Jordan as payment landscape. That was in 2013. We tried to have very innovative approach, which is not familiar to regulators. So we invited startups, we invited well-established companies to participate, whether from Jordan or outside Jordan, and I can say like more than 80% of our projects were executed by Jordanian companies. So there is really a place for all Arabic countries to try now or to start to change or move from conventional ways of executing their financial services, whether for banks or non-banks. And for the first time in Jordan, the Central Bank of Jordan approached the level playing field in terms of opening or providing access to non-banks to participate within our umbrella or ecosystem. We have now the microfinancial institutions, mainly MNOs and other financial institutions, to provide financial services directly in terms of digital payments, in terms of microfinancial services in a digital way. And most of all, I think government are the most important ingredient in any successful transformation. And we got full support from the government of Jordan and the Prime Minister to start transforming government payments and collection into digitized. And I think maybe when we start to see more uptake of these services, even at the macroeconomic level, we will start harvesting the outcomes of the success. So this is very important in the region, not only in Jordan. If we want to stop where we are without moving or taking even very aggressive movements towards automation and transformation, I think we will be lag behind by like more than what could be accounted by years.
Absolutely. Thank you for that. Mr. Eric, what have you been doing at the Arab Bank to support innovation in this sector?
I guess, first of all, it's interesting to think about innovation, what it means for banks. For me, it means two things. First, it's to make our processes and service very simple for not only our customers, actually, but also our colleagues. It's almost to be frictionless when you want to do banking. And on the other side, you have to think about how do you enrich the proposition that we have to provide value-add services to make sure that the content that you provide is not just about financial data, but also additional information to provide advice and support the decision of our customers. So historically, bankers have never had probably innovation as part of their DNA. We don't have that in our blood. We usually create processes that comply totally with central bank requirements or are very heavy in terms of controls because we're concerned about fraud, we're concerned about operational risk, and therefore we tend not to be innovators by nature. The way to bridge that is to think about where do we see innovation. And actually in Jordan we found that a lot with accelerators and incubators. So recently we did, for instance, a bootcamp, an innovation bootcamp for 3 days with Oasis 500. We brought about 20 staff from the bank, combined with a number of fintech companies, and they enjoyed time for 3 days. And each of them had to actually address some kind of problem statement. And I think the output of that showed us clearly that first teaching our staff to think differently, to think about innovation, from the idea to prototype it correctly and then to make a proper sales pitch to senior management is actually one good thing that can happen. But also mingling them with the fintech companies, allow them to see that there is actually something that we can exploit in our ecosystem. Now the last hardest thing to do is to actually embrace innovation in our ecosystem. We don't have probably the latest technology in our back end, but yet you have to create an open architecture to actually allow fintech companies to collaborate with you and even code on your infrastructure. And you know, new technologies such as API layers or API management allow you actually to open a very secure environment for third party to come and actually code and enrich, for instance, an application for, say, mortgage or loan financing. And I think that's a key enabler for us for the future. So actually the combination of accelerators with the bank and a collaborative partnership is probably the way to go.
Thank you. Ahmed, for you, you found something in the industry that you thought you could greatly innovate with and grow your company. Can you tell us a little bit about what you're doing?
Yes. First, thanks to the organizers for inviting me and my fellow panelists. I feel very lucky actually to be in this company, and to Wadid also for moderating. So my company is just a lending company. We focus on small businesses. For anybody who's read the, I guess not just development literature, but, well, okay, there's a $250 billion allegedly SME funding gap in this part of the world. And so we regard our market opportunity as a market failure, not so much as a way to enhance the customer experience. It's about providing a product to a subset of businesses who may not have things like audited financials, which are typically required in order to secure a bank loan. So when we thought about how we would build our product, not just in Jordan, but across the region, a very important consideration for us was how could we adapt existing sources of information to a credit assessment over time. And so to the extent that we're innovating as such, we're just using statistics to build behavioral models on people's repayment histories. And you erect these kinds of mental models of people you meet every day. You can decide whether you want to lend me 10 JDs or not. And so the idea is just that you can use statistics to make that same assessment for a small business. Jordan's been a great place for us to work. You may not think of Jordan, or the average person may not think of Jordan as a place where there are abundant sources of information, but virtually everybody at this stage who applies for a loan through our website does it on a smartphone in Arabic. These are the kinds of things that surprised us when we first arrived. And I should say I moved from the US to start here in Jordan.
We're glad to have you here. Thanks for that. Andrew, can you tell us a little bit about your space and what you're seeing changing?
Yeah, thank you, Walid. So, NEC Payments are, we're not quite a startup now. We were formed in 2014, so we're just coming out of our startup phase. And we formed the company really based around innovation. So our entire concept was to bring disruption into the payments industry. And to carry that disruption through, we've really focused on, I would say, 3 areas, or certainly 3 areas that I'll talk about today. It's the end of the day, and if I don't limit myself to 3, then we'll still be here in the morning and I'll still be talking. The first one of those is product differentiation in terms of the types of products that our technology platform can support. So I come from a card processing background, particularly in the prepaid card industry. And one of the things that we've noticed in this region is that the large processing companies that are here are not particularly well geared up to deal with products that are on the fringe or the innovative side of payments. So they're very well geared up to deal with mass credit card processing, they're very well geared up to deal with mass debit card processing. What they don't cope with very well is on the sophisticated side of products, more sophisticated customer offerings that are based around specific use cases. And one of those use cases, or 2 of those use cases that we're looking at, the first one is virtual payments that can be used for consumer e-commerce purchasing or consumer mobile purchasing, and that can also be used for business-to-business disbursements. And the other one is multi-currency products, particularly that are used within the travel industry. So we're launching a program now with a banking group based in Bahrain that is a multi-currency travel money product that has 8 currency wallets linked to one card plastic, and it enables you to manage those currency wallets and intelligently debits the correct balance when you spend in a certain currency. The other area that we've tried to focus on in terms of product diversification is actually the opposite end of the scale, and that's in financial inclusion. We're sitting in Jordan, where I understand, if my analysis is correct, that we are in a 75% unbanked population. In Egypt, that number's even higher, and even in the more wealthy GCC states, there are still large portions of the population that don't have access to a full range of financial services. And so our platform copes very well with products that we can get out into the market across broader distribution channels than the retail banks might be able to reach. The second area that we focused on in terms of innovation is deployment. And by deployment, I mean specifically how we run our technology platform, so the infrastructure that we run on. One of the largest costs in managing a transaction processing platform is the hardware, network security and telecommunications that are required to actually run those products, the data centers that you have to put them in, All of that can come to a significant amount of capital expenditure and a high ongoing operational expenditure, which is made even worse when you consider the need to depreciate the investment that you've made at the beginning over the life, the usable life cycle of the technology that you've purchased. Now, we've built a program that would work within the traditional method of managing this, so on-premises data centers, but we've also built our technology platform in such a way that it will run in purely virtualized environments. And that means that we can create and implement our security compliant and MasterCard certified transaction processing platform into public cloud offerings like Microsoft Azure. And that gives us the ability to scale products very quickly, to deploy products into different markets very quickly, and also to do this at a much, much lower cost. So we can reduce CapEx to practically zero, and we can run the operational expenditure for our programs for less than the depreciation. So that obviously makes a significant difference for the ability of financial institutions that we want to work with to be able to roll out our products and create valuable consumer offerings off the back of our technology platform. The third thing that we've done is slightly different, is that we've taken a different approach to actually building product and going to market. Traditionally, companies like us consider banks and financial institutions to be their only customer. And so they would sell a platform solution to a bank. A bank would then build customer value propositions or products on top of that platform, and the bank would be responsible for marketing and distribution. Now, we can see, because of the extent of financial exclusion that exists around the region, that leveraging traditional bank distribution methods is not necessarily a way to get out to the mass population as quickly as possible. And so one of our approaches is to take a more fintech approach to it, and instead of just relying on vendor-client relationships with banks, to actually go into partnership with banks under a sponsorship model, where we work with a bank, and instead of the bank purchasing our platform, the bank allow us to build product on our platform, to wrap brands and distribution models around that platform. And so the bank take a much more passive role in operating the product on a longer term than they would do normally. They concentrate on the financial services and the regulatory aspects, because that's what they're here to do. We concentrate on the technical aspects and the actual go-to-market strategy. So there's some of the things that we're doing to try and change the way that companies in our industry operate.
Thank you. So there's a lot of technology, there's a lot of incentives that you're trying to do. What's the goal of all of this? I mean, we talk about the unbanked, and we talk about the only 15% being banked. Do you think that the goal, or a goal of fintech, is financial inclusion? Is that where we're going? Is that what technology is taking us towards? I'd like your view on that, and a little bit of the spillover effects of what you think fintech is bringing to the market.
Okay. Well, statistically, it's 18% of the Arab world population only have bank accounts, versus the developed world 43%, which is a big gap that needs to be covered. And this is for ages above 15. Now, definitely, there's reasons for it. Main reasons is that the financial services are used for very limited services, number of services that are only for payroll, for very direct cash-related services. However, there are many challenges that face this. It's not just technology, and we've learned from many panels, technology is not the only driver that makes people go towards financial services or have that acceptability of going into the products that are related to the financial services to be financially included. One aspect is culture. Second is religion. Third is the fear of, related to culture, fear of banks. A lot of communities that they look at banks that they're just for the wealthy. Building the trust. All these related aspects need to be addressed through education, through step-by-step, into getting people to actually accept using financial services, number one, getting the proper education, getting the proper use for these services in their line. And we have a lot of gap that needs to be done there. I know, fintech, maybe we've we're addressing the issue from the end. There's a lot of development, a lot of fintech companies coming up. But these fintech companies, if they do not understand the demand to fulfill the supply and be differentiative in partnership with the financial institutions as customer service providers, then we will not achieve as much in closing this gap. So we have to address the demand. Fintech companies cannot be looking at the developed countries and just migrating the technology and bringing it into this part of the world. There has to be a culture, there has to be orientation, there has to be education. It all needs to be adapted before putting in the technology in front of the people and just saying them, hey, it's here for use.
Thank you for that perspective. Eric, I'm going to jump over to you just quickly because I want to get also your perspective. So is that a KPI that you have for the bank, for example, to include more people and to go after the unbanked? Is that something that you think about as a strategy for growing?
Well, I think typically our bank is not what you call a bank for the mass market. We're more a regional bank, operating more for the corporate as well as, I would say, premium type of accounts. But of course, we actually want to be a part of the ecosystem when it comes to unbanked. I think Maha certainly will add on that. On Jomo Pay, for instance, is a great example because that's typically a platform that can be operational across all of the banks and allow a simple KYC process to allow actually transfers between wallet and bank accounts. And even if you don't have a bank account, you can therefore use MNOs to actually fund it. So I think that's probably the best outcome for a country like Jordan. I'm also looking at, for instance, a lot of foreigners who are actually sending money abroad. I'm looking, for instance, at the corridor between Jordan and Egypt, right? There is a lot of fund transfers going probably through the black market towards Egypt. Having, again, fintech companies to establish actually a corridor that either we leverage blockchain technology or something of that kind to actually facilitate remittance between Jordan and Egypt would be, for instance, a great idea.
Thanks. Maha, how does the regulator see all of this?
First, I will comment before tackling on the regulators. Actually, I believe that fintech meets with the financial inclusion. That's why the Central Bank of Jordan, after 2 weeks, we will launch our financial inclusion vision policy statements, and it will be more focused on digital financial services. Fintech companies can really do a lot on the supply side, as he mentioned, to provide the services for people regardless of their physical location or their economic level or income level. But at the same time, it solves on the demand side because you can use innovation to deliver awareness to these people, to teach them how to benefit from technology in order to be more involved within the formal financial system. As for Jomo Pay, as Eric mentioned, Jomo Pay, Eric, definitely can reach every single person living on this country, and we target financial inclusion to all. So it's not only for Jordanian in Jordan, it's for Jordanians and non-nationals, including refugees and everyone. This is a generous country that will always support everyone living on this land. However, for remittances, even the corridor you mentioned, Egypt, could be now for us not within our horizon in the short term, but we started to discuss with Philippines, for example, to pilot with them for the corridor of outbound remittances. Regulations are flexible. He mentioned simplified Know Your Customer. We followed the international standards for prepaid services like prepaid cards and prepaid wallets for simplified KYC. And the people can not have bank accounts in Jordan and in the region. It's well below the international average, and Jordan is really well below its peer countries in terms of the level of income. It's only 25%, or to be more precise, is 24.6% of the adults in Jordan have bank accounts or have access to formal financial services. So you have the cost of maintaining accounts, the frill account, the minimum of 200 JDs, the requirements for KYC, the cost to commute, to go to reach any bank, so the distribution of official or formal financial institutions. Jomo Pay was well designed and developed to overcome all these obstacles. And our companies here in Jordan, I'm very proud of them, whether Dinarak, Progressoft, Madfu'at.com, Optimiza, all the companies that are really involved in this technology, they are still innovating in enhancing Jomo Pay. But very important, without the government, again, without the government's commitment to expedite on government payments, G2P and P2G, all our efforts will be useless, and the regulations should always be enabling. We cannot stand by just satisfied to provide services to only 25% of the adults.
Absolutely.
So our regulations are now more flexible and more customer-centric. We keep on monitoring what's going on in the market, interagency collaboration, and getting feedback from the market to design products, services, delivery channels to meet their needs and requirements, and our regulations will always be reflective to them, bearing in mind that the something or the taboo that we will never breach, integrity and safety of the financial system.
Fantastic. Ahmed, I'm going to shift over to you. Coming into the space, you deal with financial inclusion, and you're trying to create a service that's available for both the investors and the lenders. Can you tell us a little bit about what you're seeing so far? So how is the appetite of the investors? Are the lenders coming in? I know you do some of your own KYC. So just let us know what you've seen so far in terms of that inclusion.
Sure. Just to be clear, what Walid's talking about is a feature of the lending business whereby we accept capital from a range of sources. So a bank usually takes deposits and then lends those deposits. Our business model is to lend off our own balance sheets, so we've raised a few $1 million in equity capital. But we also allow retail lenders who lend actually through our US bank accounts, we're not taking deposits in Jordan, to lend to businesses here, and also we work with banking partners. So Eric is actually quite serious about working with the ecosystem when he says that. We work with Bank Al Arabi, Capital Bank, and Bank Al Ittihad to lend to borrowers here in Jordan. So that idea that we can act as a distribution model really hinges on our ability to do the credit assessment. And we've seen very, very substantial demand for fixed income type products amongst retail lenders. And that was one of the theses that we had when we came here to this part of the world. You don't have a liquid bond market in this part of the world that retail investors can invest in. And so that's something that we're hoping to deliver over time. But just on the issue of financial inclusion, so much of our experience has been informed by what we perceive to be an opportunity gap. And for our company, we think that the private sector has to be a big driver of the eventual rationalization of a bloated public sector. And I'm a huge supporter of the public sector, but maybe we need more private sector activity. So I think that's where SMEs are so critical to this whole conversation. Never mind the innovation piece, let's just focus on SMEs as a group.
You mentioned you came from the States. Was there something specific about Jordan that brought you here?
So my co-founder was born in Jordan, Palestinian Jordanian. I'm originally from Palestine, but naturalized American. Jordan is a wonderful country from a rule of law point of view, from the application of the laws and the adjudication of contracts and the rest of it, necessary things for doing business. I've lived in Egypt and in Lebanon as well, and those markets have some similarities, and those are eventual markets for us. But you want to come to a place and figure things out. This is a great place to come. We're now lending in the UAE, but I'd say that's a fundamentally different market. Our market opportunity, as I said earlier, is a market failure, the gap. And it exists in these really emerging markets. One final note about Jordan, I think to the extent that you can solve things here, it's true that you'll be able to solve them elsewhere, but this is still a real market. It frustrates me to hear people in other businesses, tech businesses say, I'm going to build something real quick in Jordan, then I'm going to telegraph my service, or I'm going to bound into the UAE and Saudi Arabia. I think for financial services, this is a big market with a lot of depth. We've had 700 million in demand over the past year and a half in Jordan. So it's a very attractive market, basically.
Yeah, thank you. As we see startups come into the space, Andrew, this is for you. What do you see some of the challenges or opportunities of consolidation in the space, and what, in terms of security, I know you were talking about something that was on the news a few days ago. How vulnerable is it? I mean, is this a reality that we're seeing, that everything's going to consolidate, we're going to see payments and fintech go in a completely different way? And what challenges, what sort of stepping stones do we have to go through to see that reality?
Okay, well, I think security has to be absolutely front and centre for everything that we do. And you see any number of scare stories that are true stories as well in the newspapers about exploits that have been performed against financial institutions. And as transactions move over into more digital environments with more players involved in those ecosystems, then it's understandable that there might be a perception that threat's increasing. And so for an organisation like us, trust and security and ensuring that we adhere to the highest possible standards and are audited by third parties is very, very important to us. So that's something that we spent an awful lot of time and resources working on. And also the fact that we're licensed and regulated by Central Bank of Bahrain means that although most companies would, or most individuals might consider us to be a fintech company and a purely technical operator, because of our licensed and regulated status, we've had to spend a lot more time and a lot more resources working on corporate governance frameworks and compliance frameworks and areas that I would loosely class under trust than other organisations, perhaps other fintechs may have had to have done. So I think that covers the point on security. We were talking about fintech and what fintech actually means, and the goal is the goal financial inclusion. I think the goal is financial inclusion, but the journey doesn't stop at financial inclusion. You have to ask, what is the benefit in financial inclusion? And so there's a social and economic good to be had here by moving people away from cash and into electronic transactions. And so the end goal is not actually financial inclusion. The end goal is cash displacement. And cash displacement isn't only about financial inclusion, it's about moving other cash tenders by people that are banked but just prefer to spend cash into electronic payment flows rather than cash payment flows. And there are very, very well documented evidences and case studies of the social benefit and economic benefit that could be had by driving up financial inclusion and driving down cash usage within a society.
So is that where you see the future in terms of, are we going to go totally mobile, totally virtual? Is the blockchain going to come in? Are we looking at cryptocurrency? Is that how the future looks like in our part of the region and globally as well? Fadi, maybe you can tell me how.
Well, I think the coming maybe decade is crucial that we see some kind of integration between three layers. One, telecom, financial institutions, and social media. And we see that these three are somewhat like competing with each other now. Facebook is doing money transfers, MNOs acquiring social media companies, the latest AT&T acquiring Time Warners. So between the dominance of the monetary regulators and different regulators and the cross-border risks that could happen between transferring money due to exchange, due to retail, the trade-related aspects, barriers, walls, all of these are going to be a push and pull in the coming era. Now, I think one will dominate the other, depending on many aspects of capital size, influence, politics. A lot of these will determine who's going to be winning that phase.
Maha, where are you going to place your bet on what's happening in the future?
Actually, with a very fast pace of innovations and technology, I don't think we can predict what might happen. However, I believe at this moment that blockchain is the future, not cryptocurrencies, blockchain as technology. And now some central banks in the world, they are piloting to start issuing digital currencies as the legal tender. So I'm not talking about Bitcoin or any other cryptocurrency. We're talking about legal tender digital currencies. And I think if this, I believe it will be a huge success if the whole world moves towards this direction. I think the future is blockchain. So you can never predict. Nobody predicted that MNOs might become the most fierce competitors to banks. I remember when I was a little kid, not long time ago, and we used to watch TV, this Space 1999, and when you walk, the door just opens. My grandpa used to say, "Oh wow, they think we are stupid. The door doesn't have eyes to see you are coming to open." Come on, if he's living now, what would he believe? We're talking about central banks issuing digital currencies. So the future with this technology is not predictable.
Does that scare you?
So we have to be always aware and cautious. We have to be ready, not to be like blocked or frozen, especially regulators, even the market. That's why the new approach of the Central Bank of Jordan is to keep on capacity building, trying to learn, to follow up the innovations, because usually regulators are the main impediments of any innovation. And it's not that we don't want to be accused as impeding and hindering innovation. No, it's really the passion and responsibility of facilitating life, of improving this country and facilitating the life of people and improving the real lives of people, whether households or businesses.
It's so refreshing that all of that is coming from you, honestly, in a place like Jordan. It's just fantastic and very refreshing to hear all of that. Does Eric feel the same way?
I think it's interesting. There was a discussion earlier about the fact that we're still very much a cash society. And I have to say, I have observed that we still love cash in this region, coming from even Africa and Europe before. But certainly the recent experience with Matfo.com has proven that actually for paying small bills, I have 95% of my transactions on bill payments that are actually flowing through Matfo primarily through mobile and internet. So when there is a will from all of the stakeholders, and we build a frictionless value proposition for the customer and the billers, there is a very fast adoption. So it's really about getting that equation between the different stakeholders, and of course there is some appeal and clearly need for central bank to remove cash from the market where possible. But I think it was a really great win. So in this part, it's a combination where the regulator enforced something using fintech. And I think that was a great win-win. But broadly speaking, I think if you are just a young startup and you want to go into the financial industry, probably the best bet is to try and partner with the bank. The reason is because banks, number one, if you look at their ecosystem, they have already the full capital, the full set of resource. They understand very well the central bank regulations. They have very well-controlled environment. And therefore, bringing fintech in that kind of ecosystem will teach, first of all, that company how to approach the banking sector, but also facilitate the conversation with the central bank to say, we have done our homework with that company. We believe that this can be a value proposition for our bank, and it could be for other banks as well. And I think presenting the case to central bank is a much simpler process.
Excuse me, if you allow me to add a comment to what Eric was talking about. Enabling the fintech, especially startups, it's a new approach that we are working on. We even had several meetings with our partners, whether banks or non-banks, to really help these new startups to understand the regulations. We even facilitated for, I think, will be a new-born entrepreneur in Jordan who's trying to approach now the banks with a new innovative idea concerning e-checks. We even facilitated for him meetings with the banks to discuss with them the requirements. We conducted for this young man some workshops about regulations, how to make his innovation more compliant with the regulations. So this is a very important approach, whether enabling the startups by the knowledge and the know-how, especially in terms of regulations. I know and I witnessed some experiences in the market from my position. Some innovators, they come to the bank with brilliant ideas, but because the regulations don't support that, we just say, sorry, we cannot support. So we are trying to start the journey with them, with partnership of banks. We're not still ready to have regulatory sandbox, but we will. And we are now working to have good example in Jordan, as in other developed countries like Singapore, Australia, England, and other countries.
Sure. Ahmed and Andrew, I just want to get your future vision of what you think, where we're going.
After yesterday, future predictions aren't really, no, we're very opportunistic. To the extent that we see blockchain working out in a way that makes KYC easier and it works sensibly for us, great. But we didn't know, for instance, that in the past 2 years WhatsApp would become like a big thing. So now we accept applications through WhatsApp, and you can just take a photo and send us, So we'll integrate a lot of new developments into our processes, and we do actually do quite a bit on process innovation. But in terms of pioneering new technologies or predicting, I'm not sure.
Andrew, you want to take a shot before we go to questions?
Yes, I agree with everything that anybody has said about blockchain and distributed ledger technologies. It's a big opportunity to deal with lots of process-driven requirements, maintaining KYC databases, letters of credit for trade finance, complicated international payments can all be made much more simpler using distributed ledger technology. Is it going to be just fintech companies running that? No, I don't think so. The banks are not going to disappear, and I don't think they should disappear. I also think that the payment schemes, MasterCard and Visa, have built huge powerhouses of infrastructure and capital, and they are becoming much more innovative organisations as time goes on, and they're not going to let their market position slide very easily. There was a question you asked me earlier on which I didn't answer. It wasn't me being rude, and you asked about consolidation. And I think consolidation, it will come from two areas. It will come from banks deploying the capital that they've got to buy into companies that they like the look of and putting things together. It will come from payment schemes buying into technologies and absorbing new technologies and new capabilities as they come along. The payment schemes are already doing a lot to defend their position. If you look at MasterCard's acquisition of Ocalink in the UK, a very important move, I think, where they saw a lot of competition for their own badges from domestic payment network. So they bought the domestic payment network, and along with that picked up the direct debit and bank payment clearing network, faster payments clearing network at the same time. From our perspective, we've tried to hedge our bets in terms of different types of technology by building a platform that's open. And so I think Eric mentioned open API technology, and I think this is going to be incredibly important moving on. The key to, I think, making fintech work, or the big fintech experiment work, is partnership and building ecosystems that can enable more than one company to participate, whether that's two fintech companies or fintechs partnering with banks, or even banks and fintech companies partnering with third parties that can act as distribution networks to get out into some of these territories where financial inclusion is a big issue. ultimately that comes down to the ability for all of those organisations to work together from a cultural perspective, from an organisational perspective, but importantly from a technical perspective as well. And so consolidation will come through acquisition, as we've seen in any type of industry, non-technology and otherwise, but it would also come through integration.
Perfect, thank you. I want to open the floor to any questions, so if anyone has anything, I think there's going to be some mics running around. We'll come back to you.
Thank you.
Can you introduce yourself, please?
My name is Lois Hwel. I'm a co-founder, board member, and CEO of Dinarak. We're a payment service provider and one of the mobile money companies in Jordan. I would like to make a comment and then a question to Eric from Arab Bank. The comment is really, Maha, we're grateful of the support of Central Bank. It shows commitment from Central Bank to work with FinTech, our startup FinTech, with respect, with the passion and objective of financial inclusion for the unbanked, and it's a true partnership when we say it with the Central Bank of Jordan. My question to Eric, actually, how do you see the integration or the relationship between FinTechs in this sector and the banks in the short term and long term? And when we talk to payment service providers and mobile money. I know Amma has answers, but I'd like to hear it from a banking perspective. Thank you.
I think first of all, if you look at banks, we would like to have what you call a universal payment hub that allows eventually our consumers to connect and pay with the payment scheme of their choice. So first of all, we don't give priority to SWIFT, we don't give priority to Visa or MasterCard. What we want to offer is all type of payment capabilities. Even blockchain, I can integrate it to my ecosystem. When it comes to actually building new payment methodology, first of all, it's all about making sure that this can provide scale. So if a fintech company was to approach me and say, Eric, I have a brilliant idea to create new payment wallet type of technology, I need to make sure that that has the scale that I can propagate across probably the MENA region where Arab Bank operates. And secondly, that meets the standards of the central bank where it operates. Making sure also that from a security perspective, that gives me the guarantee that those payments are going to actually go from the remitter to the beneficiary in total secure manner. I would say these are the key considerations. Now, the partnership with FinTech is how do we make banks more visible to the FinTech industry? I think as I stated before, our choice has been to work directly with incubators, with accelerators, make ourselves visible, and actually open the door for ideas to come to our bank. And we pick and choose them, and we study them. And once we pick one that is a real interest, then it's a match and we go on.
Right. Fadi, do you agree with that? Do you want to add anything from a bank's perspective?
Yeah, well, basically, it's all about integration and having the middleware or the omni-channel that will enable all these products that be available for everybody. We would, as a bank, it's always great to have these, what we call CSPs or customer service providers, which are, will, end of the day, will channel their services under certain requirements into the bank. At the end of the day, the bank will be, as a business, beneficial out of it because it will give leverage for the fintech companies to actually put up their service, and they will integrate directly with you. And this will give a win-win situation. You as a financial institution will be, or a FSB, will be benefiting, and you will be looking, advising, and whoever wins and competes under one platform, will be successful.
Great. I think we had a lady.
My name is Ruba Darwish. I'm from BNB. So my first question, I have two questions. My first question is, do you foresee a bank like Silicon Valley Bank or a bank that focuses purely on supporting entrepreneurs or technology companies and innovation, whether in Jordan, spinned off from one of the banks maybe, or do you foresee it in the Middle East coming soon? So that's one part. And the second is, how do you see the effect or the impact of Internet of Things on the banking sector within the near future? So I'm not going to say like within 10 years, but within the near future. Thank you.
Who wants to take that?
Do you prefer someone specifically to answer your questions?
No specifics.
Okay.
You're all experts, so.
No, don't believe that. I'm not. we are all learning, actually. Believe me. Sorry, the first question.
The first question, do we see a Silicon Valley kind of bank in order to support entrepreneurs?
Okay. I don't know, but I don't think so. Could be in another way. And now the Central Bank of Jordan, in collaboration with the banks, because they are the entities regulated by us, and we try to be very kind to them using moral suasion, although I think we are using our muscles. But we are in the process of establishing a fund for venture funding for startups, including fintech, not specifically for fintech. On the other hand, I don't know if I can announce so, but I will give you a brief that we have some banks in Jordan that are now launching specific funds for fintech startups and other IT-related services to financial services. But I don't think we will be having this specific kind of banks. I think in this way, the need is to provide them with access to affordable and convenient financing, whether credit or any other types of financial services they need. Going in partnership with them, providing them with credit facilities. We even at the central bank, we offered this special window with very, very low and preferential interest rate for the sector of IT companies that have not IT in terms of servers, hardwares, but for those who add the value for the economy directly. And there is soon will be establishment of new funds that are targeting these needs and the sector, but not specific banks. Eric, do you have anything to add?
Well, I can pick the IoT. So certainly I believe in Internet of Things, and it will expand way beyond what we have today. I can imagine, in a few years, you'll have your fridge telling you, this is how much it's going to cost to fill up the fridge with what you usually have. And by the way, this is the balance on the account. And by the way, based on your spending pattern of this month, you're going to be short of 100 JD. So do you want to actually increase your credit card limit? I mean, you could have that pattern or algorithm that creates a lot more visibility and immediate interaction with the customer. But I think artificial intelligence married with digital technology and big data is also going to be, I think, a big plus in the future, to advise the customer on how to resolve problems, to advise the customer on what is the next best investment that he should make on the stock exchange. So I think the marriage between those two technologies, or three technologies actually, is going to be quite fascinating.
Andrew, want to add to that?
Yeah, I think the Smart Cities initiatives that we were talking about early on is a perfect example of how IoT can be deployed, certainly in a payment sense. So the concept that sensors can, track somebody's behaviour and movements around the city and then trigger payments for things like congestion charging or public transport fees, I think is perfectly feasible, and that's now technology. That's the type of thing that can be done very, very quickly. I think, putting my black hat on for a moment, there's some risk to financial services networks from the Internet of Things. We were talking about hacking attempts earlier on, or I was talking about hacking attempts earlier on, and there's certainly examples of poorly secured devices that are connected to the internet, IoT, that are being used for distributed denial of service attacks and other types of hacks. And so, I'm hoping that IoT equipment manufacturers do things to increase their security so we don't find someone's toaster bringing down the Bank of England or some other similar horror story. But certainly it's, I may be jesting, but it's certainly a very real thing, and IoT devices are already being used for the DDoS attacks, and it's kind of one step on from that for people to use the power of a botnet based on IoT, weak IoT devices to perform financial services hacking attempts. That's something that should be looked at.
Yep. Any other questions? Yeah.
Thank you. I am Mohammed Shawawi, and I'm an IT advisor working in an NGO. My simple question is, depending on Mr. Andrews' speech, how secure is it and how reliable is it to use fintech over a media like an internet, a non-secure media maybe, in an IT perspective? Is it secure enough? Is it reliable enough to use it widely? Thank you.
Shall I take that? Yeah, well, there are security techniques that we can use nowadays to minimise the risk. However, I think, and a lot of those are standardised. So within the payments industry specifically, we have a very stringent international data security standard, which is called the Payment Card Industry Data Security Standard, and it covers things like secure transactions across internet networks. And in that specific example, we would use a very strong encryption technique like TLS version 1.2 to actually secure and encrypt the transactions between those endpoints. So yes, it is possible. And certainly organisations like us don't have the choice whether or not to adopt those standards. So for us to do business, for us to connect our transaction processing platform into MasterCard and Visa, and for us to achieve our licensed and regulated status, we have to demonstrate that we meet the required standards.
Any other questions? Yeah, we have two here, if you can help us out. We're taking our time since we're the last panel, so.
Hello, my question for Mr. Ahmed. My name is Manar Kayed. Do you believe that financing SMEs with products only visible enough to support SMEs to start up their business or not? Especially that you are the CEO of Liwa, and this is what Liwa provide for SMEs.
So if I understand correctly, is it enough to sustain the sector and develop the sector? I don't think so. We don't even lend to startups. The average business in our portfolio has been around for 5 years, and we look at cash flows, we look at things like whether the individual business owner has bounced checks. So we are not a panacea. We're not going to solve the problem ourselves, our banking partners, and our wonderful regulator. The entire system has to come together to build appropriate solutions. And we only focus on trade finance. When you want to talk Internet of Things, I wish everybody had electronic point of sale systems where they just uploaded their sales to us so that we could do a cash flow assessment at least. But if you're not a trading business today, we have a hard time assessing your cash flows. So we're a very, very small part of the solution.
Yeah. One more question.
Sorry, actually, Manar, in Jordan, our economy almost entirely relies on SMEs. I think it's 98% of companies in Jordan are considered SMEs. So huge efforts should be done in this regard, not only from the regulator side or the government, from all stakeholders, whether private, public sector, because this is the sector that keeps this economy moving.
Last question.
Hi all, thank you. My name is Yusuf Basit. I'm head of business development and business innovation company. Actually, my question to Mr. Fadi, my question is about mobile payment. Actually, as I know, you're in Sudan, you already have done this since year ago. It's all about cultural change. This kind of service, this kind of payment, it's a new payment method, and it's changing the culture that the people are used to pay in a different channel, different payment methods since years ago. So I would just like to ask you about how you tackle all this, how you deal with this changing, and I want to know about your experience in Sudan when it comes to mobile payment.
Sure. Sudan has its own specifics as far as the country. It's a population of 38 million with 27 million subscribers, and it only has 2 million bank account holders. The unfortunate thing in Sudan, which is something that it's untypical of many countries, but in Kenya, M-Pesa, the MNO, the mobile network operators drove the mobile payment system. In Sudan, the people created something called airtime transfer. And that is something so damaging to the economy. And it created this quasi-money cloud, which has become so damaging to the economy that had its macro economy implications. Now, how we tackled this is basically we did not align with MNOs, because MNOs and their dealers are the ones who will kill any kind of initiative that will help mobile payment in real cash happen. So what we did is we created our own agency. We went ahead with agency banking, and we created our agency banking network to bypass the MNO dealers. And again, a bit costly, and this is known in any kind of MNO business. For the inception or the first stake, there has to be a cost. What we did is basically we injected anybody who registered with a small amount for people to start practicing and putting in the money. The only setback is the USSD channel. The MNOs have this as their own monopoly product. This USSD, we are now, as banks, our financial sector, we're going to the NTC or the National Telecoms regulator and telling them it should not just be monopolized to the telecom MNOs. But we as Bank of Khartoum, as specific as Bank of Khartoum, we recently acquired the telecoms company to overcome them. And we bought it from Etisalat UAE.
You should have replaced all the feature devices in Khartoum by smartphones. That would be cheaper.
We are planning to do a lot with that. We're moving into LTE, public Wi-Fi.
Perfect example of consolidation.
This is only specific Sudan. I cannot say that it's a wide experience.
In Jordan, before we launched the national switch for mobile payment, we started with the TRC, the telecom regulator in Jordan, to ensure that everything will be smooth, no competitive edges for 1/1 or monopolizing or any of these things. And I remember I visited Sudan and they use airtime in Jordan. It's not allowed because it has very serious inflationary pressures and other implications on people. Adding to that, our government would be more than happy if we use airtime. For airtime, there's like over 40% taxes. So imagine if you pay over 40% tax on your money, while the Jordanian people would be more than happy.
No, it's actually, and to be precise, in Sudan there is tax of nearly 22%.
Yeah, but they
plus,
are, yes.
The airtime to be converted to any commodity or cash is also discounted from 15 to 20%.
And it
that shows you people look for stability, accessibility, and at any time. So I would say banks were at fault of not being there, but technology came in ahead of banks, and people created this airtime, and the telecoms, for them, they're selling a commodity, and they're getting liquidity, financing their network expansion, and their OPEX, their operating expense. And on the worst side is basically the Sharia protects this airtime because it cannot deplete. The airtime will remain forever for life, because Sharia-wise, this airtime value cannot ever be amortized or depleted in the balance of any user. So it worked well with the MNOs, but it's not going to be for long.
Again, to Mr. Al-Basis, I think sometimes we overestimate the cultural issue, although cultural impediments are the most critical, but the main area, sometimes you are reluctant to use any technology because of the ignorance. So if you start by awareness campaigns and to build the trust with people, you will really overcome all these people. And it's like I'm not just like mentioning the example of M-Pesa in Kenya, but I saw it. People in very remote and dispersed area, they use it, and very old people. So do you think they managed to accept it and our people cannot accept it, or they wouldn't? But there is an effort that we have to work on it, not only to overcome the cultural reluctance or barrier, but because this is part of consumer protection. You have to teach them what are the benefits, what are the implications and the risks of, for example, their PIN number or these things. This is part of consumer protection. Adding to that, part of our responsibility and responsible financial services. So it's not only building a service and making profits, or even facilitating people's life. We should make the market conduct in a more responsible way. This is something we should all believe in, especially if you are targeting poor and vulnerable people. We have to consider all these things.
Thanks to the audience for sticking around. You've really made this pleasurable for us, and thank you very much, our panelists, for being here.
Thank you so much, panelists. The last panel of the day. I can see you're all quite happy just to sit here and relax and look at our wonderful audience. Ladies and gentlemen, once again, thank you for our panelists and our moderator as well on financial services. Ladies and gentlemen, we have now, as you can see, we've come to the final part, the end of day one. It's been a great digital day here in Amman. If you liked today, if you enjoyed it, if you want some more insights, valuable tips, and valuable ideas, we're going to do everything. We're going to do it all again tomorrow. Tomorrow morning, back here at 9:30. Enjoy your evening, and we'll see you again for day 2 of the MENA ICT 2016 conference.